Welcome to the next episode of KapVista Klips. Today we are going through the SK Capital offering. Hey, how are you?
Hey Daniel, how's it going?
Good, good. I'm excited to learn about this because this one is it's close to home. I mean, it's in Sydney in the Hills District, so I'm excited to hear a bit about the offer. But let's get started. Tell me about SK Capital. Tell me about your background, the team. Give me the story.
Yeah, sure. It's pretty much like a typical migrant story sort of thing. We SK Capital itself is a family-owned business, and we started off in 2009. So it started off under the directorship and mentorship of my dad. We started off as a small mortgage broking and accounting firm, and the accounting firm was actually managed by my dad's sister. So again, always from the start has been like a family-oriented business. And then as the business grew and our client base expanded, we also chose to expand into further areas of the industry. So we opened up SK Realty, which is our property sales and management team, SK Insure, which is general insurance, and over the last 7 years, which is probably one of our bigger expansions, and that was SK Homes, where we do large-scale developments and also construction. So a bit about me and I guess the general SK background. I'm the son of Chris, who's director of this business. And essentially I joined the business after completing my double degree in commerce and science, majoring in finance and stats from UNSW, so about 2.5 years ago. And since then I've been pretty much helping SK Group expand and become a bit more efficient in the business processes as we see and take on bigger challenges over the last couple of years. So overall, we've done quite well in diversifying our business, and that's what our clients appreciate most about us. That it's sort of a one-stop shop. You know, they can get mortgage advice, tax advice, help in the setting up the investment structures for the investments, and also we offer now investment opportunities in our developments, and as well as obviously building our brand through construction projects. Over the last couple of years, we've completed quite a few projects all across Sydney, gained quite a bit of experience, and the team is rapidly growing and expanding as we go along. So I think we're quite excited over the next few years because I think SK Capital is just ready to kind of burst into the scene, whether that is through our property fund license, also through our development projects that we're currently having in the pipeline.
So you have services that complement each other. You're a one-stop shop, and now you have launched SK Capital to fund the property development arm.
Yeah.
Okay. Awesome.
That's pretty much it. Essentially, we acquired our AFSL under the MIS scheme. So it is a wholesale unregistered scheme about 2 years ago. And since then, because we have this existing client database that have been with us since the very start, we have clients that have been with us for 5 years, 10 years, and they have quite a bit of trust in us in terms of helping them achieve their financial goals. And hence, we thought that this was quite a bit of a sort of a great opportunity to provide to our clients where they can invest their monies and kind of get great attractive returns. And they're partnering with someone that they trust and that's helped them for the past 10 years in building their financial goals.
Yeah, so it's quite interesting that you have not only you have the financial advice, the mortgage broking, the real estate, so the sales side of it, the construction side, and now the capital management side. So by streamlining it, you can effectively reduce the fees along the way and increase the returns for the potential investors into the fund.
Yeah, that's exactly correct, because we would have obviously very low overheads, very low staff costing as well, because a lot of our staff is multifaceted in a way that they understand different parts of the business and they can advise the client on different parts of the business. And that's why you'll see that the project management fees that we charge on our license is pretty much quite a bit lower than the general market property funds that you'll see at the moment.
Yeah, that's awesome. So tell me about this opportunity, because it is in Sydney. It's an area that I know. So tell us about the opportunity and the milestones you've achieved so far.
Yeah, so it's pretty great opportunity. It's probably one of our biggest projects yet. It is in the premium suburb of Castle Hill in the Hills District, and the property fund is essentially called Middle Part Enhanced Property Fund. The name comes from the location where the site is based. So Middle Partridge is the one of the streets that's adjacent to, and Partridge Avenue. So the opportunity is essentially the development of about roughly 350 apartments, 1 to 3 beds, and also penthouses. And we're looking to raise capital for the acquiring of the land. So the site right now is 14 houses, and the sites are under contract. They've been exchanged, and we're looking to settle them towards the end of this year.
Yep.
So that's the opportunity. Investors come in as obviously equity partners in a closed-ended unit trust, and their money is held in external custodian perpetual. So it's a closed-ended trust. The investment term that we're looking to raise for is 4 years, and the minimum target return that we're looking to raise for is at 15% per annum. In terms of feasibility and how the project looks, and also the development side, Castle is pretty much one of the Hills area's favorite suburbs. It's been named as one of the main strategic center in the Hills planning statement for 2036. So what they're looking to do is really develop and boost the economy of Castle Hill over the next 10 years and really prioritize that in terms of the development. So the site is actually only 300 meters from the Hills Showground. So prime location that way. And there's also plans for the Hills Showground for the council to develop it. And there's a master development plan for the Hills Showground where they're developing the area, building recreational activities, creating and investing in a retail and commercial hub. So you'll see that activity and development benefit this project quite a bit in the next 5 years.
Yep. So you've got the 14 properties under contract. You're looking to raise funds. How much are you looking to raise for it?
So land we're looking to raise so the purchase price for land will be about 60 million, and we're looking to raise about half of that. And we itself as a developer are so confident in this project that we'll be putting a minimum of 10 million and up to 15 million in this project ourselves as well.
Okay, so you're putting your money where your mouth is, basically.
Of course, yeah.
Okay.
And I think that's what we've done in a lot of our past projects as well, giving investors confidence that we're just not raising land. We don't expect you to put your money in when we also in it for the risk as well.
Yeah, perfect. So you're raising half of the purchase price, so around $30 million. What's the momentum for that raise? How much do you have penciled in, and what's the momentum you've had on that raise as well?
Yeah, so it's been quite good. A lot of interest from our existing investor database. As I mentioned, we've put about 10 million ourselves so far, and we've raised from investor money. Committed money is about 5 million, and general interest that hasn't been committed, but general interest has been about for 5 more. So we're almost halfway to 2/3 there in terms of our capital raise.
Yeah. Okay. Great. And then what does that look like in terms of the construction? Once you've acquired the properties, are you raising a second fund for the construction, or what does that look like?
Yeah. So about 50 to 60% is what we're looking to raise, and the rest for land settlement would be financed through the private lenders, which we have quite a bit of database and network from through our experience from past projects. And then for construction, we're looking to build this site in about 3 stages. So about 1 tower of apartments each, and that'll be done simultaneously. Each stage will take about 14 months, and we'll start the next stage about halfway between the previous stage. And in terms of financing that construction cost, we'll be looking to mainly use private lenders again, and whether we have pre-sales, and we can maybe even go to major banks for that. And what we see is, because we're not raising, I guess, a huge amount of equity, it also gives investors a higher share in the profit. Because we have an experienced construction and development arm and development team, we are confident that we can complete the project in time without any major delays. But in regards to that, we've also done a lot of sensitivity analysis to see, okay, what happens if construction costs increases by 10%? What happens if sale values decrease by 5%? And looking at all these numbers, we're still looking at about an IRR of about 18 to 20%, while our base scenario at this moment is calculated at about 30% IRR. So it's quite a premium project, but the capital we raised only for that land.
Yeah. Okay. That's the exciting bit, because it is in a premium suburb. The project is in, if people know Sydney, Castle Hill is in high demand. So, there is a lot of benefits out of this project, which is exciting. Okay, perfect. For the investors who are watching this and they're close, they can go past. You can provide them the details of the project, and they can go past and have a look at it, see where all the the showground and the other benefits of the location are, and then we can happy to connect them to you if they're interested in investing into this offering. But thank you for walking us through that, because it's a very exciting project. And if anybody knows the Sydney property market, it's even with all the doom and gloom from the economists, it's still going strong. And
I think there was some recent news as well that last month there was I think in the past 13 months, last month Sydney saw actual positive return on the property market compared to obviously the property market going down over the last 1 year or so. So I think we're looking to see something positive coming through in the next 6 months, and that'll help, of course, further boost investor returns. Yeah,
and that's the exciting part. All right, well, thank you very much for jumping on. It was great to chat and hear more about the project. Anybody who's watching this and wants to get in touch, please let me know and I can connect you directly to the team. But thank you very much.
Thanks, Daniel.
Great to chat to.